Good day, students. Once again, I will be recording this short question on cost and management accounting 1. Try to explain some of the basic stuff that are necessary for the understanding of this topic in response to the question. It says first, I like to begin with the requirements. We are required to calculate first the prime cost, which is direct material plus direct labor. Those are prime cost. Then after we go to conversion cost, which is direct labor plus manufacturing overheads. Then we calculate our production cost per unit, calculate our variable production cost per unit. Then after we are to calculate the net profit or loss if 7,500 units were sold at a unit price of 200 each. So these are the 5 requirements that we have. Very straightforward requirements and with a straightforward given information. Let me read what is given to us. It says that Africup Ltd has the following information that relates to their production activities for the period ending 28th of February in the year 2013. So this is the period in which the production took place. We are given direct material. Remember, direct material is directly traceable to production, and we need to be aware that direct costs are variable cost. So now they don't have to tell you that material is a variable cost. The minute is a direct cost, it is a variable cost. And we are given indirect material, and they say all variable. Remember, indirect cost are indirectly related to production, meaning these are the costs that are not directly related to production. Like, for instance, the salary of the supervisor. The supervisor does not work in the production department, but he is supervising people who are working in the production department. So now indirect costs are the costs that are not directly related to production. We speak of electricity, we speak of water, depending obviously to what you are producing. But most of what I'm mentioning in the case of a production company are the indirect cost. Obviously, when we are producing drink or still water, then water will be a direct cost. But if you are producing a desk and you use electricity in the process of doing the desk or a chair, then the electricity will be an indirect cost. Now we have direct labor. As I said to you that all the direct costs are variable cost, and we know that variable cost changes as the production changes. Meaning when production increases, then our variable cost will also increase, and when production decreases, our variable cost will also decrease. Variable costs, they vary with the level of activity, or meaning they vary as the production increases. There will be more costs that are variable, and when the production is decreasing, then variable cost will also decrease. And you can see that all these 3 costs are variable, but this one is direct, this one is direct, and this one is indirect cost. Now I will be explaining even some of the concept as I proceed doing the calculation. We have our manufacturing overheads cost, and these are the costs that are also not directly related to production. Similarly, with the indirect material is also a manufacturing overhead cost. Be mindful the fact that they've separated, it does not make it a non-manufacturing cost. It is still a manufacturing overhead cost. So meaning we could have also placed that indirect material here as a manufacturing overheads cost. Under our manufacturing overheads cost, we have factory rent, and the factory rent is 12,000 rands. And we definitely know that the factory rent is supposed to be a fixed cost, meaning the factory rent does not change as the level of activity changes, unless obviously we reach the maximum capacity of our production space, so our production area. then rent can increase, then it will become a step fixed cost. Then now we have our other variable overheads, which amounted to 28,000. And take note, they say other variable manufacturing overheads. But I did tell you that rent is fixed. If we pay the rent of 12,000 per month, it will be 12,000 maybe up until the year, then it will change after a year. So now that will be indicating that rent, factory rent, renting the area or the space, will mean that it is a fixed cost. Then we have selling and administration. Now, before I do the selling and administration, let me go back to what I've been highlighting. Remember, this direct material, it is a production cost. Indirect material is a production cost. And our direct labor is also a production cost. And our manufacturing overheads, these are also production costs, meaning when we are calculating our production cost, we need to take into account all the manufacturing costs, including direct and indirect cost and manufacturing overheads cost. Now we have our selling and administration cost, where they say 40% of it is variable and 60% of this cost, it is definitely fixed. So now that means out of the 250,000, we multiply that by 60%, we get 150,000 rands, and that 150,000 rands is a fixed cost. So now that means out of the 250,000, if we multiply this by 40%, it will give us 100,000. And the 100,000 of the selling and administration is what we call a variable cost. I'm using FC for fixed cost and VC for the variable cost. Now, these are the costs that are given to us. I want to bring this across to your mind that selling and administration cost is not a production cost, meaning selling and administration cost are non-manufacturing cost or a non-production cost. We normally call them period cost, costs that are incurred only for the period. So now when you are required to calculate the period cost, you must know that you only focus on the non-manufacturing cost. Remember, when the product is done to be produced or when the production of the product is complete, therefore now we can sell that product. Therefore now that will be the selling and administration cost. So now the sales and admin cost are not production related or are not manufacturing related cost. So now we must not add them in the production cost, meaning the cost of producing a product must not include selling and administration cost. Then now we have splitted that into fixed and variable, fixed being 150,000 and variable being 100,000 rands. So now these are the information provided before the last sentence. The last sentence is the production level of 10,000 units. This is very important. We'll be using this 10,000 units very much. The production level of 10,000 units was achieved during the period, meaning we finished or we produced. In other words, we can say we finished / produced a total of 10,000 units. We produced a total of 10,000 units. Remember, this 10,000 units was produced, and the cost that was incurred, we incurred 450,000 in order to produce the 10,000, 450,000 in terms of the material, and we incurred 50,000 rands of the indirect cost in order to produce this 10,000 units. And we incurred 200,000 rands of the direct labor in order to manufacture the 10,000 units. And we also have incurred the total of all these manufacturing overheads. We incurred them in order to manufacture this 10,000 units. So now that means the cost of producing these goods will be made of material, will be made of labor, and will be made of the manufacturing overheads. Remember, the indirect material is a manufacturing overhead. I'm just combining all of that. So now that is something very important to note, because I will be doing that now in response to the questions. Now, the first question say that we are to calculate what we call prime cost. And as I said to you, that prime cost is made of direct material plus direct labor. So now that is what prime cost is made of. So now let us calculate our first requirement, 3.1. We are calculating prime cost. Prime cost is only the direct cost, which is direct material. Then after we have our direct labor. Direct material will be the first amount. Then after we have our direct labor cost. Then we need to check how much was the total cost of direct material. Direct material cost amounted to 450,000 rands. Remember, this is a variable cost. Don't forget that direct cost are variable cost. So now we had the cost of material that was worth 450,000 rands, and we had a direct labor that was worth 15,000 rands. Let me confirm that figure too. So now we did have the direct labor was 200,000 rands. The 50,000 was the indirect material. So now our direct labor was an amount of 200,000 rands. So now that means our total of the prime cost will be the sum of the two figures, which will give us 650,000 rands. 4 plus 2 will give us 650,000 rands. So now this will be our total prime cost. 450 plus 200 will give us 650,000 rands. So this is in response to requirement number 1. Then we come to the second requirement, which is requirement number 2, where we are calculating conversion cost. Conversion cost is made of direct material, and be mindful of the fact that we are dealing with the totals here. Sorry, it is made of direct labor. These are the costs that are incurred to convert material into becoming a finished product. Direct material and manufacturing overheads. Now our direct labor is an amount of 200,000 rands. Remember, the word says conversion, meaning these are the costs that we incur to convert material into becoming a product. Because material must be converted, or material must be processed in order for it to become a product. So now conversion costs are the costs that we incur to convert or to process that material to become a finished product. So now obviously we will need employees who are called direct laborers to process or to convert that material to become a product. And we'll also need our manufacturing overheads to convert such material into becoming a finished product. When you speak of the conversion cost, more especially manufacturing overheads, we know that we speak of the depreciation, we speak of the rent, and all other costs that you might think of, electricity. Those will be the manufacturing overheads that will be focusing on throughout these activities and exercise. So now let us look at the overheads that we have in terms of how many overheads did we have. Our manufacturing overheads that we have, and I did mention to you that indirect material is a manufacturing overhead because it is not directly related to production. Now, all the costs that are indirect, they are manufacturing overheads. So now, hence, I did mention that to you earlier when I was explaining. So now we go there, we go to our manufacturing overheads, and we say the first manufacturing overheads was a factory rent of 12,000 rands. Let me start with that one, then come to the other overheads, then after take into account the indirect material. We have the factory rent, which is a manufacturing overhead Then we say factory rent, and our factory rent, it is an amount of 12,000 rands. Then we come to the second overhead, which is other variable overheads. So now that will be other variable overheads. Other variable overheads, and our other variable manufacturing overheads amount to 28,000 rands. Then we record our 28,000 rands. Then after we go to indirect material. Indirect material, and we know that our indirect material amounted to 50,000 rands. So now our manufacturing overheads, remember also if there was indirect labor was going to be added here. If there was factory depreciation, meaning depreciation for the factory machine that was a machine that was going to be added here again. But we are not given such overheads, but if they were there, we're going to have to account for them. Now we have to add all these three overheads, which is 12,000 plus 28,000 plus 50,000 rands. That gives us a total of 90,000 rands. So now these are the overheads that we have, and we can add the total to get to the sum of the total conversion cost plus 200,000, which is our direct labor. This gives us a total of 290,000 rands. So now this is our total conversion cost. Remember, conversion cost, it is direct labor plus manufacturing overheads. These are the costs that we incur to convert material into becoming a product that is finished. So that means direct material can never be a conversion cost, because we can't convert material using material. We convert material using labor and manufacturing overheads, electricity, indirect employees, direct employees. So now those will be what we call the conversion cost, and they are definitely there in every class test that you will be writing. Now we go to the next requirement. Very easy requirements, honestly, when it comes to this topic so far. Then now we go to the production cost per unit. Take note, it is production cost per unit. When we speak of production cost, we are speaking of the cost of production, meaning selling and administration will not be in the picture. I can just cross that so far. Selling and administration is not in the picture. We are referring to the production cost. Direct material is a production cost and is a directly related production cost. Direct labor is a production cost. And our manufacturing overheads are also production cost. I will always bring that one here at the bottom just to make things very easy for us. So now that means when we're calculating the cost of production, we need direct material, we need direct labor, and we need manufacturing overheads. You must always make sure that we have all these three elements or components of the production cost. Because a product to be complete, there must be some material, there must be employees who are converting the material, there must be manufacturing overheads that are used also to convert the material, so that these two are called the conversion cost. So now we need these three components: direct material, direct labor, and manufacturing overheads. And please be mindful that our manufacturing overheads will be divided into two, fixed and variable. We need both of them. We need both the fixed overheads and the variable overheads. We combine both of them, and that becomes our manufacturing overheads. And I did mention to you that rent is also a fixed cost, and it's a fixed manufacturing cost. We are looking only for the manufacturing cost. Selling the product has nothing to do with the manufacturing of the product. Selling has nothing to do with the production of the product. We are looking for the production costs, the costs that we incur to produce a product, which is direct material, direct labor, and manufacturing overheads. Now, let us go to 3.3 to calculate our production cost per unit. be mindful of the fact that it must be per unit. So now let us look. We are given our direct material cost, and this is the total amount. We want it per unit. The question is, how many units were manufactured in order for us to incur the material cost of 50,000? We manufactured a total of 10,000 units. So now if we are looking for the cost of material per unit, we need to divide by the number of units that were manufactured. So now we need to say here, divide this by 10,000 in order to for us to get to the cost of material per unit. Then you say 450,000 divided by 100, or divide this by 10,000, we get to material cost per unit as 45 rand. Then I will say we also do have our, I just want to do it in the order. We have covered material. Let me come to labor. Our direct labor is 200,000, and it is the total direct labor, the total labor that was incurred to manufacture the 10,000 units. So now we want to know how much is the cost of labor for 1 unit, because we are required to calculate per unit. So now the same concept will apply where we divide here by 10,000, and after dividing here by 10,000, this should give us 20 rand if I'm not mistaken. 200,000 divided by 10,000. This will give us 20 rand per unit. So now that means employees are being paid 20 rand per unit. Now we come to the manufacturing overheads, of which our manufacturing overheads, they include indirect material. Let me put this material here so that all my stuff are in the right place. There's nothing wrong the way the manner they did it. They just wanted you to know that indirect material is a manufacturing overhead. Now again, we can do the same thing with the overheads, where we divide all of them by the number of units. 10,000 divide here by 10,000, and we divide here by 10,000. But at the same time, this will be a very long approach, dividing every element or component of the product cost by 10,000. That might be consuming time. So now another very easy approach could be to say, okay, I know that my total of the manufacturing overheads amount to a sum of 90,000. If you remember, we calculated that where we said 50,000 plus 12,000 plus 28,000, it gave us 90,000. We can just say 90,000 divide this by 10,000, and that will give us a variable or manufacturing overheads per unit in total. 90,000 divided by 10,000, this will give us a total of 9 rand. So now meaning our manufacturing overheads per unit will amount to 9 rand. And now, though it's 9 rand, I still want to go into details and calculate it individually. 50 divided by 10,000, this will give us 5. And if we say 28,000 divided by 10,000, divide this by 10,000, we get 2 rand 80 cents. We get 2 rand 80 cents, and okay, what did I skip? 12,000 divided by 10,000 there. This will give us 12. Now if we say 12,000 divided by 10,000, we get to 1.2. So we have 1.2 plus, we have 1.2, 1 rand 20 cents plus 5 rand plus 2 rand 80 cents. We still get to the same 9 rand. So now either way, you are going to get to the same 9 rand. So now we say direct material plus direct labor plus our manufacturing overheads that amount to 9 rand. That will become the total cost per unit. Now let us go and do the calculations, very official or neat, a bit nice and neat. So now we are calculating our production cost per unit. Production cost per unit, and we are looking for the unit cost. Our production cost per unit is made of direct material, our direct material, as we said that we are looking for the cost per unit, 450,000 divide by 10,000. Please do show all these workings, and this will give us 45 rand. Then we go to the direct labor. For our direct labor, we are looking for the cost of labor per unit, but we are given the total of 200,000 rands. Therefore, now we divide this by 10,000. Then after we get to the 20 rand, then we come to manufacturing overheads. Manufacturing overheads. Then now under our overheads, we have different manufacturing overheads. The first one is indirect labor. Sorry, it's indirect material, not indirect labor. Remember, if there was indirect labor, it was also going to be added as our manufacturing overheads. It was 50,000, divide this by the number of units that were manufactured, 10,000. And this gave us 5 rand. Then after we came to the factory rent, which we said the factory rent is very likely to be fixed. And our factory rent was 12,000 rands. We divide the 12,000 rands by the number of units that were manufactured. With 120 cents is what we have calculated. Then the last one, we said it was other overheads. Other overheads or other manufacturing overheads, which amounted to 28,000, and 28,000 was divided by 10,000 units, and that gave us 2 rand 80 cents. So now our total manufacturing overheads, if I still remember, they gave us an amount of 9 rand. So now to calculate the cost per unit, make sure that everything is per unit. Everything is per unit. Now we have calculated and converted everything to be a unit cost. So now we can say 45 rand plus 20 rand plus 9 rand. 45 plus 20 plus 9, this will give us a total of 74 rands, and 74 rand will be our production cost per unit. So this will be 74 rands. So now, however you calculate, if you want, you can put it at the bottom. Some people prefer to write there and say production cost per unit. Production cost per unit. Production cost per unit. Now, I took this using the very long approach. Let me be honest with you on that. And the reason I'm doing this because sometimes you might be required to calculate it in the manner I am calculating it. I don't know how many marks were allocated for this, and I think it was 1 mark. And now, when this type of a question is only 1 mark, you need to know that honestly, you don't have to do such calculations. When it's 1 mark, you can go back and say, previously, we already had our production cost, and our production cost was calculated as a total of 290,000 rands. So now we can, was it 290,000 rands? Oh, those are the conversion cost. We had our total production cost, which okay, we were not required yet to calculate our production cost. So now, meaning if we want now, we can just take the two amounts, the conversion, the prime cost, or in fact the conversion cost plus direct material. Remember, our conversion cost is only made of the total of our labor and overheads, meaning we only need to say plus our material of 450,000. And the minute we plus our material, this will give us our production cost in total. So now we could have said 290,000 of the conversion cost. We add our material in order for us to get to the total cost of production. Then we divide this by 10,000 units. It will give us the same 74 rand that we have calculated. So now you could have done that if you want. Let me just draft it at the bottom. We could have said conversion cost plus direct material. Our conversion cost, we calculated it as 290,000. Our material is 450,000. So we can say 290,000 plus 450,000. This gives us 740,000 rands. And we divide this by 10,000. And this will give us the same 74 rand. Remember, this will be production cost per unit will be equal to conversion cost, which is our production cost in total. So we could have used that shortcut approach just to go straight to that 74 rand. Now I'm taking the long way because you might be required to do these calculations sometimes in details. Now, that was requirement 3.3. Then we go now to the variable production cost per unit. We are only focusing on the variable production cost per unit, the ones that are variable. Now, if we are required to only calculate the variable cost, that means there must be one that is fixed, and I did make mention of that one. So now our variable cost, it makes life very easy at this stage because we have already done the calculation. We know that our direct material is a variable cost that I mentioned before. This is a variable cost. Direct labor is a variable cost, and under our manufacturing overheads, they told us that this is variable cost. We said this is definitely a fixed cost because it's rent. Now, under our other overheads, we need to check if which of the overheads were variable. Which of the overheads were variable? Oh, they specified that it was other variable overheads. So now we have 1, which is direct. We have 2, which is indirect. We have 3, which is direct. We have this one again, which is number 4, which is a variable cost. Remember, as I mentioned to you before, that all the direct costs are variable in nature. So now direct material and direct labor, they don't have to tell you that they are variable. You just have to know that variable cost is always direct material and direct labor, and others that will be given to you. So now we are looking for the cost of material, cost of the variable overheads, cost of labor, and the cost of the other overheads. And because I've already done the calculations, meaning I don't have to redo the calculation that I've done here, so now it minimizes everything for me. Therefore, now I can just say under 3.4 that my variable cost will be direct material, and we are required to calculate it. I think it is a per unit. Variable cost per unit, yes, it is per unit, so I don't have to be doing the recalculation. Direct material, variable cost per unit, which is 45 rand. Direct labor, I've already calculated all the figures above. It was 20 rand. Variable overheads, my variable overheads, which is production overheads, variable production overheads. We had indirect material. We had our indirect material. Indirect material, we had it, and another one was other overheads that were variable. Other overheads that were variable. Our other overheads was 2.80 rand. Here we had 5 rand. So now that will be, let me confirm the figures. Our other overheads, remember these were variable, 2.80 rand. Our indirect material, 5 rand. Direct labor, 20 rand. direct material 45 rand. So now these are my variable overheads. Per unit, 5 rand plus 2 rand 80 cents. It gets me to 7 rand 80 cents. Then 7 rand 80 cents plus labor plus material 45 plus 20, I get to 72 rand 80 cents. 72 rand 80 cents is the variable production cost per unit. So it was important for me to do the workings in 3.3, though they were a little bit not much necessary, but they were important for the next question. Now, these are the variable cost. Remember now that variable cost per unit remains constant, or variable cost per unit are fixed, but in total they change as the level of activity changes. Maybe in the next question I will be covering in all of that. So now that means the 45 rand, which is per unit, is fixed. The 20 rand, which is per unit, is fixed. And the 5 rand per unit is fixed. And the 2 rand per unit is fixed. Why? Because variable cost per unit are fixed. Variable cost per unit are fixed. In total, they change as the level of activity changes. Then we go to the next requirement, which is the last requirement. Calculate the net profit or loss if 7,500 units were sold at a unique cost of 200. Now we are calculating just the net profit, straightforward, as it will be done in the accounting side. So now we say our sales, we sold our units for 200 and we sold 7,500 units. So now we say 7,500 times this by 200. It gives us a total of 1,500,000 rands. 1.5 million. Then we need to less our cost of sales. We need to less our cost of sales. Now, our cost of sales, we need to say how many units were sold. Now, I don't want to be ignorant of financial accounting and the fact that we can do things in finance as they are done in costing. From a financial accounting point of view, when we calculate cost of sales, please don't use this approach. I'm just explaining how costing and finance are interlinked. When we calculate cost of sales, we normally say opening plus production, which we normally say this is purchases. Now we are no longer purchasing, but we are producing. Then after we say less closing. I want to bring this as an explanation. Please don't write this as the solution. There was no opening inventory in this case. When it comes to our production, we said that the cost of production, if you remember, we calculated the cost of production. And the cost of production, I think we calculated it as 740,000 rands. Yes, we said 740, though I don't have the cost of production in total. I have the cost per unit, production cost per unit. Let me check if there is production cost per unit. Yes, production cost per unit was 74 rands. And we said that in total, the production cost was 740,000 rands. That was our production cost. Where was this production cost coming from? Let me clarify you on that. Material, direct and indirect labor, plus the manufacturing overheads. The sum of this gave us the amount of 740,000 rands. Let us prove that so that we are all on the same page. 450,000 rands plus 50,000 rands plus 200,000 rands plus 12,000 rands plus 28,000 rands. This is the production cost in total. The total cost of production is 740,000. And we said if we divide this by 10,000 units that were manufactured, we get to the cost per unit as 74 rand, if you still remember that. So that is why now I have the rights to say my production cost, meaning which could have been classified as purchases, will be 740,000 rands here. It would have been 740,000 rands. Then after we say closing inventory, how many units were left? 2,500 units will be left. Why 2.5 will be left? Because out of the 10,000 that was produced, we produced 10,000, we only sold 7.5. So now that means 2,500 units will be closing. And the cost of each unit here, remember, is 74 rand. So now if we say 2.5 times this by 74, it will give us the cost of the inventory that is left. So now that will be how we account for that using my own approach. Let me highlight that. Remember, the cost of the inventory that is left, it costed us 74 rand for every unit that we have. We multiply this by 2,500, it will give us 185,000 rands. Now I just want to link this with financial accounting, but you don't do what I'm doing. I'm just showing you this now, meaning the cost of sales will be 184 minus 740,000 rands, meaning it will be 555,000 rands. This is how we would have done in cost accounting, in financial accounting. Then after we get to what we call gross profit. Therefore now our gross profit will be the difference between 1,500,000 rands and 555,000 rands. Then our gross profit will be 945,000 rands. Now let me withhold it there. You see how the figures look like. This was my own approach. But cost accounting will tell you that don't be wasting time and saying opening plus production. They simplify things for you. They just say cost of sales. We focus on the inventory that was sold. 7,500 times this by 74 rands. We only sold 7.5. So we are looking at the cost exactly of what we have sold. We don't have to be saying opening minus closing to get to the cost of sales. So now in costing, this is how you'll be doing it. 7,500 multiply this by 74. This still give us the same 555,000. Nothing is changing. So now the figures are still very much aligned. So now let me write it there so that everything is bit neat. 7,500 multiply this by 74 and therefore now our gross profit comes up to the same amount minus 1,500,000 rands, and this will be 945,000 rands. So this will be the gross profit. I'm just showing you the bigger picture. Also, when you arrive to second year, know that we'll be accounting for cost of sales in the manner I've shown you previously. Then after we say less other expenses or less non-production cost, let me say that less non-production cost or non-manufacturing cost. We had sales and admin cost, sales and administration cost, sales and administration. We don't have to split them into fixed and variable. We had the same amount of 250,000. We don't have to split and say this was fixed and this was variable. It's not necessary at this stage. Then now we minus 250,000 rands. Then after deducting 250,000 from that figure minus 250,000, this will give us a total of 695,000 rands. 695,000 now becomes our net profit. So now this will be how we calculate the cost of goods that were sold. It is very important to know that it is based on the cost per unit. Multiply that by the number of units that were sold. Then you're determining the cost of what was sold. straightforward question. Let me close on that note and say, guys, thank you. Hope you have grabbed something and put it at the back of your understanding. Thank you very much.